Hi, I'm Charlie Leonard.
And I'm Sean Pascal.
And we're with the Leonard Real Estate Group, and today we're bringing you video tips, and we have as our special guest Aldo Saavedra with Firenze Group. Welcome.
Well, Charlie, thank you for having me. Same to you, Sean.
Of course, man.
Good to be here.
Aldo, let's say we're real estate brokers, and we have a buyer, we have a signed contract, and now they're ready to apply for the loan. So they go see you. What is a typical application process?
Well, I'm going to tell you, normally a typical application process takes 30 to 45 days. You have a person come apply for a mortgage, will request appraisal, processor will request all the different things that are needed, insurance, title, survey, and many other things that also it's too lengthy to get into. And then once they gather everything, it goes to underwriting. Underwriter's going to ask for more documentation. They always do, specifically, nowadays after the lending crisis that happened. Normally, again, 30 to 45 days for closing.
Although, what are the typical documents that a buyer is going to need to provide?
It's really cool because the documents that are needed to be provided is very specific to the individual. And I'm going to tell you, there's no two identical sets of documents, for clients. To get started, you're going to need 30 days of pay stubs, you're going to need W-2s, you're going to need tax returns in most cases, 2 months of bank statements, a real estate contract, and IDs. It's very important to have a driver's license and a social security card if you have it. If you don't have a social security, they can always go to the Social Security Administration and verify the authenticity of the social security number. But that's basically, just to get started.
Okay, Aldo, so now the buyer has, we have a signed contract, they win and they met with you, they apply for the application, it's in process. So what are some of the do's and don'ts that the buyer should be concerned about at this moment?
I'm going to tell you, there's a lot of do's and don'ts, but to be a little bit more specific, it's really important that you make sure that you turn in your documentation that's being requested on time, that you sign all the disclosures. There's time frames in terms by law of how much time you have the disclosures to be signed, and if you're not able to do this in a timely manner, they have to cancel the transaction and start all over again. Another thing you want to do is you want to make sure that you're staying on top of your loan officer. The squeaky wheel is the one that gets the oil. You want to make sure that everything is being done and that they're not pushing your file aside to work on other people's files. And the third thing would be to make sure that you're paying everything on time as you have, up to the time you got to the application. You make a late payment, that could cost you the deal.
What about the don'ts?
The don'ts are really specific. You want to make sure that everything stays the same from the information that you provided to your loan officer at application. You didn't change your job, because if you change your job, a new job may have a probation period, which may cost you to get denied. You don't go ahead and acquire new debt, which could cost you not to be able to qualify because you have higher payments. Basically, you keep your assets the same, you're not depleting it, and what have you. It's very important to everything that you submitted to the application stays either the same or improves.
Aldo, that was a lot of good information. Thank you for coming. We really appreciate it. I'm Charlie Leonard.
I'm Sean Pascal.
And thank you once again for joining the Leonard Real Estate Group. We're here for all your real estate needs.
Thank you.
Thank you for having me.